And we're back with Tail of the Tape. Today on this edition of TOTT, we compare two high-growth e-commerce players in China, and they are not Alibaba and Tencent, but MD, short for Meituan Dianping, and PDD, Pinduoduo, two online companies that are disrupting the e-commerce market in China with their group buying strategy, also known as collaborative consumption. Both these online platforms are really focused on allowing people to buy in groups at steeper discounts, thereby optimizing their shopping experience. Now, Meituan Dianping has nearly 70% market share in the online food delivery space as it continues to expand in online travel and online groceries. So really making investments in new business initiatives. Pinduoduo, or PDD, is a platform that really leverages social media networks like WeChat, offering discounted prices on a huge range of products to consumers who buy together with friends or acquaintances. Now, it is dominant and primarily dominant within China's agricultural farm-to-table sector and is very active in rural and semi-rural areas. If you just take a look at the valuation metrics of both these companies, they are similar sized in terms of market cap. The forward price to earnings would not be the real measure to compare these two businesses because there's so much in investment mode and in growth mode that the focus is really on advertising and pushing and gaining more market share. But price to sales being the right metric cannot be compared for both the businesses because Meituan Dianping is a real sum of parts entity, which means that it's broken down into three strategic business units in online food delivery, online travel, and online groceries and other new business initiatives. So price to sales may not be a good comparison as well there, like to like. But what you need to focus on is the ROE. And on the ROE front, you are looking at how Pinduoduo is perhaps eking out more by way of profitability on equity financing at 30.5% ROE compared to a more investment-oriented Meituan Dianping, which is going at 21%. If you see that getting reflected in the year-to-date performances of the business, obviously you have seen PDD outperform Meituan Dianping. Even in terms of forward price to book, there seems to be more on the table for Pinduoduo than Meituan Dianping, which is actually tripled or four-folded jumped since its IPO in 2018, Will. We have Shawn Yang, who's Managing Director at Blue Lotus Capital Advisors, joining us with his take on both the entities. Shawn, good to have you on the show. Thank you very much. Finally got you. This was an important comparison. What do you make of the fight between Meituan and PDD at a time when obviously there is hyper competition in the e-commerce market and there is really the fight to gain more market share?
Yeah, I think that I would rather to take a more short-term and a long-term comparison. In terms of short-term, I mean probably next quarter. You are right that we have seen that there's increasing competition between Taobao, Tmall, JD, and Pinduoduo. So their Pinduoduo's traditional competitors like launch more subsidy campaign this quarter. So I wouldn't say like second quarter is going to be a very good quarter for Pinduoduo. But I think that from long-term perspective, because they have very good achievements in terms of international expansion, you have seen that Tmall expands very rapidly in North America, and they also now try to enter European markets, and probably some people say that they're going to also considering Asian markets. So I think in the long-term perspective, Pinduoduo should have more potential market size than Meituan. In terms of Meituan, I think that they're also facing competition with Douyin, but I think that the markets overreact to their margin decline. I think that the competition with Douyin is going to be a necessary step. So I would say that probably that Meituan, like in the near term, this quarter, they should have better than expected results. But in the long term, probably it's not going to perform as well as Pinduoduo.